what's going on YouTube? What's going on Instagram? Simulcast, powered by StreamYard. We are the Way Podcast. The time is now 8:07, a little bit late, but always on time. This episode, we're going to do a little bit of work with our financial folks up in this house. So if you are a person interested in finance, if you are a part of our course, if you have been ever interested in trying to figure out how to pick stocks, how to pick a proper fund, we're going to go through that today. So today's episode is going to be about finance. And now we'll start this financial conversation the way we start every conversation, which is how do we want to see our goals for 2022? Like what is the goal that you have in 2022 to make sure that financially you're in the right position, right? We're going to start with that because whenever we're talking about money, it's important to talk about how you begin. Hey, Auntie, what's going on? Nice to see you. Always a pleasure to see you. We got to catch up. So yeah, we definitely want to start with how do you want to see this year go? A lot of us that came into 2022, we already had, the pandemic on our minds. We already had things that were going on in our lives that we're trying to just manifest and make things real, So to me, 2022 has been a year of reaping the harvest. That's what I call it. Right now, my wife is reaping the harvest in the kitchen. So if you hear any banging, that's her doing stuff during our live airing of Wealth Wednesday. Okay. She's making dinner or something. And then the baby's having a good time. So this is the year of harvesting, so a lot of folks have been working really hard at their craft, hard at their jobs, hard just in general at their businesses. Many business owners I've met who literally started their business for the first time this year. All of these things are things that are positives for 2022. So we're going to talk to those folks and get to the basis of how do we get you to become from someone who is thinking about investing to an investor, someone who's thinking about retiring, before they're 65, to someone that has already planned their retirement, for someone who doesn't have residual income to someone that knows how to generate residual income and what it's going to do for them. So we want to change this conversation as to how to get things done as opposed to what could be done. A lot of people would like to sell you the dream, like, hey, if you sign up for this program, we're going to make sure that you do this, that, and the third. Whereas, that's the way, that's how I've seen it. But for us, I don't want to just show you how the program works. I want to have you become a part of the program. I want you to be able to own the way that we do things around here, meaning you're going to take ownership of your debt, take ownership of your expenses, take ownership of the assets that you have or don't have, take ownership of the intention to get those assets, because we have to remember that the majority of investing is mindset, literally. And mindset comes in two forms. One is an offensive form and a defensive form. If you're familiar with football, you'll pretty much know what I'm talking about, right? So in football, you have offense and defense. Offense scores points. Defense prevents you from being scored on. At the end of the day, whoever has the most points wins. Both strategies matter. You got to have a defensive-minded strategy when it comes to finance and an offensive-minded strategy when it comes to finance. Both are very important. Defensive-minded strategy would be something like, I'm only going to invest in stocks that I have some sort of knowledge about. I'm only going to invest with people who have actually shown profits in their investments. I'm only going to, put in a portfolio that's going to be a good portfolio based on the economics that are happening in the society around us. So if you are investing in a company that is in an industry that is not really doing well during a pandemic or war times, well, then maybe you want to reconsider how much asset allocation you have in that industry. So for example, let's say that you're in an industry for customer goods, right? Consumer goods. That industry during a pandemic boomed because, again, people were doing the Amazon, people were doing the buy by mail, people were doing a lot of digital marketing. That was a big thing. So if you have a digital marketing company that you're investing in, chances are they're going to do well. Think of like, Docusign. Perfect example, right? And we're going to do a lot of like case study today because I think that was one of the things that I wanted to get back into for 2022. We did our first historical stuff back in January, February, and March. But now in April, I want us to get back to, our core, which is financial literacy, which is understanding the nature of the market, investing like an economist, all of these things. So I'm going to pull up our window. If you're not on our YouTube stream, click the link in my bio. You'll get over to our channel. From there, you'll be able to get into our YouTube channel, and we're live on there as well. We are powered by StreamYard, which is why we can simulcast with the best of them. So let me share my screen. I'm doing it over there now. Hold on. How's everyone doing today, by the way? I didn't even ask you guys how you're doing. Hood Brother Mo, my man. How you doing, brother? All good over there, my friend? And Auntie, how are you doing? Tell me how you are. Everything's okay with you? All right, Safari, share. Chrome has permission. Okay. Well, we're still going to do that. Share that screen. Share that screen, Chrome. Share that screen. Let's do it. I'm trying to share screen and Chrome is not allowing me to share my screen. I'm like, what? Allow me to share my screen, please. Window. Safari. Share. Go to system preferences. Unlock screen sharing. Select by lock button left corner. Oh, we're not doing that today. All right. So folks on StreamYard, we're not gonna be able to share a screen today because there is an update which is not allowing me to share my screen from Chrome. So unfortunately, you're not going to get that. So that's fine. If you want to see my face at a different angle, you can stay here if you want to. Okay. All right. So we're going to go to Yahoo Finance. And I said we want to go to Docusign, right? So if you have your phones and if you have your Stocks app on your iPhones, just click onto your Stocks app and go to the company Docusign. Their ticker symbol is DOCU. Okay. And I'm going to show you something real quick. Okay. So I'm going to go back to the 5-year for Docusign. And I want to show you how, and this is, we talk about stocks. We talk about how, depending on what industry your stocks are in, it'll determine what type of rate of return you'll get in that type of industry. Docusign is a company that basically, as a matter of fact, let's go through the system, how we do this. So if you have an iPhone, just put DOCU in your iPhone under ticker symbol, find Docusign. If you're with the rest of us, you go to Yahoo Finance, finance.yahoo.com, log in on there, punch in search news or symbols of companies, put in DOCU, and you'll field the sign for Docusign's page. It'll come up. Let me give you their profile. Under the tab, there's summary, company outlook, chart, conversation, stats, historical data, profile, financials, analysis, options, holders, and sustainability. Those are all the charts. Peace, Goddess. What's going on? How you doing? Yes. Good to see you. Good to be here. Your Highness, I appreciate you coming through. Vapor, what's up? Congolese Kells, what up? Well, people are popping up in here. Everyone out there doing good in the neighborhood. I really just read something about Ethiopia being on a different calendar and a whole different year. Oh yeah, Ethiopia's, they don't follow the Gregorian calendar. So they're for them, 2012 was like 4 years ago or something like that. Like they're like a 5-year or 7-year gap in between them. I think it's 7 years maybe. But yeah, there's definitely a gap between the Ethiopian year and our year. Yeah, they don't support Gregorian calendars at all. Their calendar is actually accurate in Ethiopia. We need to go back to that. But neither here nor there. So, hey, Melissa, what's up? All right, so we're looking at Docusign right now as a stock. And what I want to show you guys is why, if your portfolio has companies like this in it, which took advantage of a pandemic, took advantage of the ability to not be face-to-face with people. You know, Docusign is a company that's based around you being able to have physical copies of documents uploaded as PDFs, and then you can sign off on them digitally, and that is an actual contract, right? So I've had a ton of folks do DocuSign, especially when we do onboarding at my company, where they have to submit a W-4 form or have to submit, an I-9 form, and we're not physically seeing them because they're doing it all on virtual. They're going to upload all their documents, and then they sign off saying, hey, I allow FSN to run background checks on us, this, that, and the third. It's a DocuSign document that they sign off on, legal binding, right? So check this out. So looking at DocuSign's profile, it says that DocuSign provides electronic signature software in the United States and internationally. The company provides e-signature solutions that enables businesses to digitally prepare, sign, act on, and manage agreements. It also offers CLM, which automates workflow across the entire agreement process, insights that are artificially intelligent to search and analyze agreements by legal concepts and clauses. Gen for Salesforce, which allows sales representatives to automatically generate agreements with a few clicks from within the Salesforce, negotiate for signing before they sign, CLM, which provides AI-driven contract lifecycle management. So like they are literally basing their entire company around how to make the sales process efficient and the legal process efficient. So what you're going to see is companies like this are going to continue to expand because the reach for having digital contracts is going to continue to increase. Like COVID did something where it forced us to recognize our inefficiencies as an age, as a country, as a world. I'm talking to Canadians, I'm talking to Americans here, folks that are international. When you look at the inefficiencies that COVID exposed, right? One of them was I don't need to pay office expense to have my workers work. I don't need to have an expensive Manhattan loft for my company in order for them to be profitable. I don't need to have 10 workers doing the job that 5 can do. I don't need to have a secretary if I have an actual answering service that can do all that work remotely and that I can 1099 a bill for. Like, we figured out a lot of different ways to manage and maneuver during COVID that companies like Docusign took advantage of, because they said, hey, if you're not going to see your staff or you're not going to see your clients, well, I want to make sure that you can still get the sale. So you call them on the phone, say, hey, I'm going to send you that document right now. Just sign off on it. Let us know that you agree with these terms, and then we'll execute the contract and send you your product, this, that, the third. That's what COVID exposed. So look at this company, right? So Docusign now, so you know what they're about. They're housed out in San Francisco, right? Let's look at their chart. I'm gonna pull up the chart now. I'm gonna go to when COVID started, which was 2020 March, right? So 2 years, I'm going back for 2 years. So on my chart right now, I have a 2-year chart that shows, it goes from February 17th, 2020 up until today, right? Now, if you can see this chart, and I wish I could, as a matter of fact, hold that thought. You're going to see this chart, because why not? This is a cell phone. I can work with this. Let's do something. I'm going to unhook you right here, right? I'm going to unhook you, and I'm going to flip my screen around, and you are going to see what I'm looking at. Okay, boom. All right, so do you see this chart right here? All right. Okay, let's turn off the light. I don't need it if you guys are in the background. Hey, can you guys still see me on YouTube? I hope you can. If you can't, I'm sorry. I'm on another page right now. See, guys, at StreamYard, see how we're working? That's how StreamYard works. It's a really cool site. All right, so back to where we're going on. Okay, so this is where we are, okay? Now, this was February. Let me put my cursor over it. I want to do February 20th. So February 10th of 20, you can't even see that, but it's February of 2020, right? Okay. This company was trading at $88 a share, okay? $88 it opened at. Now, as you move further along, and this is during the pandemic, right? It went from $88 and all the way until July. So this was March. So April, May, June, right? Still rising. Now it's 176. July, it was at 212. Let's keep going. October, Docusign was trading at 229. November, trading at 220. December, January of the following year, trading at 257, still going up until last year. June of last year is where it reached its peak, right? And think about what happened June of last year. June of last year, do you remember what happened June of last year? June of last year was when restrictions for COVID started loosening up. June of last year was when folks stopped having to have vaccines in order to get into business facilities, right? June of last year was when, because we had enough people with herd immunity, companies were starting themselves to open back up again, right? All of this was June of last year. So Docusign started seeing a decrease in their sales in June of last year, their stock price, right? Why? Why did June of last year, why was that the opening of it? Because again, now folks who were contracted out with Docusign didn't actually need their services anymore, because now they were back in the field. Now they were back actually doing their job, doing their work. And that is how a company like this, you'd have to understand the nature of this company before you invested in it. And I think that's where we need to focus our energies when it comes to the conversation of what stocks to pick. You can't just pick stocks because they're the hot stock. Like, let me get the AMCs. Let me get the, what's the other one that was running? AMC and GameStop. Let me just get these stocks. No. See, right now you have to start selecting stocks in companies that are going to profit based on the society's norms, based on what's happening right now in society. So if you are, do I need lighting? Am I too dark? Is that my melanin popping too much? Do you guys need that lighting? I don't know if you need the lighting. We don't need light. I actually like it like this. I don't need lighting. Just see the chocolate. I'm a dark skinned man. Let me enjoy my dark skin. All right. So when it comes to what the society is pushing, you want to get into companies that are going to benefit you in the society that we're in. So a Docusign company, and we looked at their stock chart for the last 2 years, you could see where that made sense. You could see where it made sense to jump on that stock because, again, we moved from the office, we were remote. We had a lot of folks that still needed contracts signed. I remember I had a brick job done in upstate New York, right? 400 miles away. My brick contractor sent me a contract for the job. It was like a $6,000 job. Cool. Sends me the contract via Docusign. Signed this contract. The next day, him and his team are out there doing work. Legal contract binding. I FedExed him the check overnight. Boom. That was how life was happening during the pandemic, right? And going forward, it's going to continue to happen that way because that is how we are moving as a society. So a company like Docusign, even though they just hit, again, they hit a lull after the market, their stock price dropped significantly. So their market price dropped from, they had a high of $310 back in August of last year, okay? From August of last year to right now, they went from $310 down to $101, right? Dropped by 3 times its amount. Now, who made money there? Who made money on Docusign losing from 300 to 100, right? Were you one of the folks that made money on that? And I know that you probably weren't because you'd have to know how to do very sophisticated trading in order to take advantage of that. Options buying would have helped you here, right? You would have put puts up, which is basically the betting that the stock would go down. You would place those bets on that stock as an option, and you would just wait for the collapse to happen. Now, folks that did this helped to push the price down, just because, again, when you are betting that a stock's going to go down, and it actually does, it goes down by like leaps and bounds. It doesn't just drop like randomly. It'll drop by a lot. And that's essentially how you can make money during that time frame. So think of it this way. You can make money by betting that the stock will go down and forcing someone to buy you out at a higher price, right? That's basically the layman's terms of how you make money when the stock prices are going down. You're basically saying, hey, I'm about to take advantage of someone betting that the stocks are going to go up. Because remember, options work in 2 ways. You have someone that thinks it's going to go up, someone thinks it's going to go down, and they come into contract together, right? And whoever wins gets the other person's money. That's basically how it works. And you hold a contract for the time frame that you want to hold onto this bet for, right? So there's different time frames that you can hold on the contract for. Some are 60 days, 90 days, 160 days. Like you have different time frames. So if I was the one that bet that Docusign was going to go down, and you bet that Docusign was going to go up and went to options together, contract together, well, if I win, all the money that you had, you have to now put up to me directly. And I could sell that stock literally this next day and I'm good. I don't even need to keep it because I won on that bet. So that's what option contracts can do. But if you don't know how to trade options, then don't start. In the meantime, for everybody else that doesn't trade options, just know that when you get into a company Docusign during a pandemic and you expect for a lot of transactions to happen digitally, you have to know that that is a timeline. Like you need to look at the economy and say, okay, when are we opening back up? When are things loosening? When are restrictions slackening? Because when that happens, I'm going to have to trade out of this position, right? That's a simple example of when you can look at a chart and know that you have a trajectory. Now, one other aspect to look at on this Docusign, right? No, I always tell you guys that when you look at a stock chart, you want to look at 2 things. You want to look at the RSI, which is the Relative Strength Index, RSI, and you want to look at the way that the stock is ticker symbol is trending, right? Depending on if the stock had a good day or a bad day, it'll be red, which is bad day, green, which is a good day. Cool. If a stock has more red than green, that means that it's on a decline. If it has more greens than red, that means it's on an increase. So by knowing these little symbols, you can figure out when's a good time to buy, when's a good time to sell. Now on Docusign, if I look at their RSI, okay, it actually gave us an indication of when we should have sold this. And I'm going to show you how. I can't flip my screen again. So if you guys have your Yahoo Finance app up, finance.yahoo.com, just log in on that, look up the chart, and I'm going to show you the time frame that I want you to look at. Hey, T, what's going on? Nice to see you on here. We're talking Docusign, we're talking stocks, we're talking how to see when to get out of a stock, right? So Docusign had a uptick from, what was that, 5/10/2021 all the way till 7/19/2021. So that's 2 months of a bullish run, okay, last summer. Now, when you look at the ticker symbol, you're going to see the green arrows going up and up and up. Cool. But what you need to look at, not just the ticker symbol going up, you have to look at the RSI. Because whenever the relative strength index is above 50, that means that you're no longer getting a deal. That means that this is no longer trading at a discount. It's trading at a premium. So think of it like you have a, let's see, what is something that is trading at a premium? Okay, we're gonna use cell phones because everyone has a cell phone, right? Let's say that you have the latest iPhone and that iPhone costs you $300 to purchase because you have a wholesale contract, right? $300. that iPhone is going to increase in value throughout the iPhone cycle. Because remember, if it's an iPhone 13, you're going to have it until the iPhone 14 comes out, right? As soon as the next model comes out, the value for your phone drops significantly. So let's say that you paid, let's be realistic. iPhones don't cost $300. iPhones cost $1,000 average, right? Cool. You pay $1,000 for your iPhone 13, right? The iPhone 14 is now about to come out tomorrow. What price do you think your phone is now going to be worth when that phone releases? When the iPhone 14 releases, your 13 now drops in half. So if you paid $1,000 for it, you could probably sell it only for $500. Why? Because the new model is now out. It's probably going to cost about $1,300, and people are going to want that. No one's going to want your phone. Supply and demand just says and dictates prices, right? Cool. So you need to know, if you want to sell your iPhone 13 while it's still relatively expensive, you want to sell it when it's going to get the most bang for its buck. So you'd want to sell it before the 14 comes out. So you would sell your iPhone 13 today if you knew that the 14 was coming out tomorrow, right? Because today the 14's not out yet. People want the newest, latest phone. You might be able to get $800 for it, maybe $750 for it, right? Cool. As soon as the iPhone 14 comes out, you're not getting $750 for your phone. You're not getting $800 for your phone. You're getting $400, $300 for your phone. Why? Because it's no longer the in thing. No one wants it. Stocks do the same thing. When you see the relative strength index of that stock going up and up and up, you're basically seeing the beginning of the end for that stock when it comes to if you want to buy and sell. You have to look at that. The RSI before the stock took a tank was at 68 out of 100. So remember, 100 is the high, 20 is the low, 100 is the high, 20 is the low, and your stock price is literally saying that if you buy this stock right now, you're paying overpriced for the stock. You're basically paying 30% more for the same product. Is basically what that RSI of 68 means. It's basically saying that you're spending more than this is valued at. So don't buy it. The average price of 50 for the RSI, which is the relative strength index. I'm going to repeat these words. I need you to know the jargon, guys. The relative strength index of any stock is located in the chart. The chart tells you what it is. So in the date of 7/19/2021, the RSI for Docusign was a 68 out of 100. You want an RSI that's 50 or below when you want to buy stocks, because you want to make sure that you're buying it at a discount. You don't want to buy overpriced stocks. However, you definitely want to sell overpriced stocks, right? So if you had this game plan of going into Docusign, you saw the pandemic happening, you saw folks needing to have digital access to contracts, cool. You read the tea leaves on that, okay, cool. You bought Docusign at $100. Stock price went up to 300. Cool. You just made 3 times your money because you bet that a company like Docusign would be the right type of company to help businesses during a pandemic. Cool. How do you know when to get out? Well, simply put, you would look at the relative strength index. When the RSI gets to above 50, now you're in devil's territory. Now you have to start looking at, how do I start positioning myself to sell my stocks at a premium for those who want to buy it at a premium? Because again, you want to buy low, sell high. Buy low, sell high. How do you sell high? You sell high when the RSI is up. That's when you sell it. You buy it when the RSI is low. So the RSI was low, below 50, the entire, literally from January of last year. Let me go back further. Okay, so the RSI was below 50, going back to August of 2019, it was at a 40, right? Then after that, it went up to 57 and stood there. Literally, if you look at my graph, you look at the RSI was above 57 from September of 2019 all the way up until March of 2021. Then it dipped below. And that was, again, another buying opportunity. So when you look at the company strategy, right? You knew that you wanted to buy the stock, even if the RSI is high, because of the nature of the industry and the economy. We know that Docusign is going to make money because people are going to use the services. They're not able to see each other. So even if the RSI is higher than 50 in this example, because you decided to get into that industry before it blew up, that's okay. Now, when you see the reason why the industry was important start to slow down, meaning folks are now starting to get back into the office, starting to get back into their own contracts, starting to let go of their Docusign agreements and actually signing things in person. When you start seeing that trend shift, that's when you need to look at your RSI, because that happened literally when the pandemic was starting to slow down and folks started going back into their office. with masks, half workers, all of that stuff. That happened literally last year. So the RSI went up all the way until then. And then it took a dive as of November 30th, 2021. So this November, the RSI went to 20. That's what it fell to, right? 22. What does that mean? That's a buying opportunity, right? So right now we are in a company right now in Docusign, and this is just, again, my prediction, a company Docusign that just went up by 3 times. It showed you the value of what it can do long-term. It showed you that in a digital economy, it's going to be one of the leaders in helping folks to get their contracts through without having to be face-to-face. We are moving into a digital age, which we already are in, but it's going to get more so that way, right? This is a company that I think is a long-term buy, just because when we think about how they move and what they're about, if they continue to improve on their software and improve on the uses for what they're doing, we're going to need companies like this in the future. The only issue that I see with this is other companies coming in with similar offerings, right? Docusign had they had the lion's share of just clientele at the time, but with companies like this, there's going to be competition. So that's all you'll have to gauge. You may not get the same robust three times percentage that you got over the last 2 years, but I don't see them as a loser going forward, because industries are going to shift into this type of area. So right now, Docusign is trading. Let me do their 5-day chart. Okay, right now they're trading at a $102. Their RSI is below 50, so they're still a buy. Still a buy right now. It's been a buy, I would say, the majority of this time. As it's been dropping, it's been a buy. So that's a company that I would say definitely keep your eye on. Add that to your ticker symbols and to your watch list. One thing that you need to know as an investor in 2022 is look at where things are going. We had a war that just happened. Hey, Crazy Legs, what's up, buddy? I just looked up and I saw you. What's up, man? All right, so yeah, so we just had there's a war happening in Ukraine. They don't call it a war. It's an I don't know. They said it's a mission of some kind. I don't know what they're calling it, but it's a war. They have a mission going on in Ukraine. It's causing a lot of lag in transportation of goods and services, oil prices. You're seeing a lot of things now affected by that conflict, right? As these things continue to become mainstream, and there's going to be other conflicts that happen and arise out of this, you have to know that if your company or the companies you invest in are impacted by that type of warfare, you need to be prepared for that and know that, okay, is this a good time to buy it or not? I think that this year is showing me that this is a good time to reset. Like, you need to lean out yourself, get to a space where you're not overspending on anything. You're saving more than you're investing right now, because there's going to be value that you're going to get down the road. Like, people think that having a valid savings account is a waste of your money. I think differently, because when you have access to capital that's liquid and ready to be used, when the opportunities present themselves, you can take advantage of it. So for example, there's an opportunity that presented itself for me that I couldn't take advantage of because my money was tied up in other investments that I have. And that annoyed me to the point where I'm like, even my wife sees it. She's like, you're just selling everything. I'm like, yeah, if I don't need it, it's gone. If I don't need it, it's gone. Literally all the things that I have to assess myself. Let me put this slide on for YouTube, because YouTube doesn't seem to have the same level of melanin poppage as it should. So, for me, being in a position to invest in things that are the opportunities that come up, that's what money is for. And cash is king when it comes to that. You cannot buy real estate if you don't have cash and capital that's available for 3 months liquid in a savings or checking account. Like, you need to have that. I've been of the belief that my money should be tied up in an asset. I don't care what asset, but any asset. I'd rather have my money tied up in assets than have it just sitting in my savings account. So I understand this, right? But what I'm seeing coming up is we need to be prepared to drop money on land, prepared to drop money on, crypto that might be coming out that might have a pop, to be able to invest in things that are going to present themselves randomly. I had a business proposal that came to me 2 weeks ago, where for a fraction of my investment, I could literally create anywhere from $50,000 to about $150,000 a year in residual income off of a very, nominal investment. It was significant, but, doable, right? And I'm like, damn, What if people didn't have the position to be able to invest in something like that? Like, you literally are going to miss out on an opportunity that can change your entire year's salary. Like, I know folks who don't even, like, the average income in New York State is $51,000. Average household income in New York State is $51,000, right? If I could replace that by 3 times the percentage by just making an investment in an asset, right? I wouldn't have to work. I could then spend my time in my real estate business or doing other things. Like, it frees your entire life up, but you would have to have the capital up front to get involved into something like that. So that's where I think, again, my spirit is leading me to that, where it's like you need to have access to capital for those purposes. What's that I'm hearing back there? Can we lower the volume, please? I think that's Karma back there. We got Karma going off right now, extra loud, which I don't mind. That means baby girl's loving her TV. So, so for me, again, it comes back down to being prepared for things. And you're only prepared if you are in a position to invest in things at a moment's notice, because that's really where the deals are going to be. So I would suggest for folks, lean out your personal spending, lean out. And by leaning out, I mean just get down to the nitty gritty, the things that you need. This is not the time to be overzealous and overspending. Like, don't do that. Lean out yourself and get to a position where when the opportunities rise, you can take advantage of it. Docusign is a long-term investment. I would say definitely take a look at that. Let's get into another one. Let's go to Finance Home. I'm going to pull up, and again, we want to do case study for how to pick stocks, right? So let's look at, I'm going to go to the loading page, most active stocks. So one way that I kind of figure out where I want to invest, and if I want ideas as to how to invest, I do 2 things. I go to finviz.com and I check them out there, or I go to finance.yahoo.com, I go to stock most actives and I click in it. So I'm clicking on it now. And the most active stocks right now, good or bad, we have, I'm going to do percentage change and rate it that way. Aurora Innovation, down 12%. Let's do what's been up. Okay, Newegg Commerce Inc. Have you heard of Newegg Commerce Inc. before? You have not. Okay. So Newegg Commerce Inc. For folks who are online with us right now, their ticker symbol is NEGG. We're going to do a case study on them right now. Let's check them out. So NEGG is their ticker symbol. Let's look them up. I found this by looking up most active stocks on finance.yahoo.com and sorting by percentage change to see which stocks had the greatest percentage change for today. Very simple way to find out who's been a big winner or loser in, today, right? So they had a change of 27% today. So let's look them up. I'm clicking on their symbol now. Okay, so today they went from 665 to 866 today on their one-day trade. Let's go to what we normally do. We go to 6 months. All right, so their 6 months chart looks like they have been dropping. So they were a $14 stock and they dropped down to $8. Okay, and let's go to the year to date. No, go to 1 year out. Okay, so they've been pretty steadily dropping since it looks like July 6th of 2021. They had a stock price of $67, and ever since then, it's been dropping down to $6. Let's see what they do. So Newegg Commerce Inc. What do you guys do? They're located out of California. Again, all I did was I'm on the finance.yahoo.com website. I looked up the ticker symbol NEGG, and I'm looking into a case study for this company. They had a really high investment today. I want to see what that was about. So they are, under the description, it says Newegg Commerce Inc. operates as a tech-focused e-commerce company in North America, Asia, the Middle East, and internationally. The company offers computer systems, components, electronics, gaming products, networking, and smart home products, office solutions, software and services, automotive and industrial products, home and tools products, health and sports products, apparel and accessories, home furnishings, and personal goods. It also provides a portfolio of technology, marketing, logistics, and other partner services. The company was founded in 2001, is headquartered in City of Industry, California. Newegg Commerce Inc. is a subsidiary of Hangzhou Lianlu Interactive Informative Technology. So it is a subsidiary of a Chinese company, right? Okay, cool. So see what you find out about companies. So, all right, let's see what happens here. So it's a subsidiary of an Asian company. Let's go to their financials. So step two, you find out the profile, what the company's in, what industry they're in. So they're in tech. So tech is always a good industry, especially when it comes to times like now. They're the ones that are going to give you that type of return. I'm looking up their financials now, breakdown, and let's see their balance sheet. Okay, I need Yahoo Finance Plus Essentials to see that. Oh, you guys are crap. I'm not buying that. I said leaning out. I'm not gonna. If you can't show me their financial breakdown, then I'll have to get it somewhere else. So let's go to summary. All right. I'm looking at their summary page now. Their market cap is $3.9 billion. So they're a small cap. And they have no dividends. Average volume is about 1 million. So they're not a really highly volatile trading company. But lately they've been trading at 140,000, 170,000. So people are taking advantage of that. Earnings are coming up April 6th. Okay. All right. So from what I can tell so far, this is the type of company that is not a long-term investment. Just because, again, they had a huge drop in price. Going back 5 years, they back in, what was it? June of 2021, the price was at $46 and now it's trading at $8, right? So those are the kind of companies that, again, if you see a stock chart that looks like this is not the one you want to invest in right now. Even though they had a 27% day of interest, that doesn't mean that the company is actually doing anything special. They're definitely undervalued when it comes to RSI. Let's check that out. Let me go to their chart, see what their RSI is at. Okay, their RSI is currently at a 46, which is below 50. So basically it's saying this is a good time to buy, right? That's what it's saying right now. But I wouldn't buy this company, especially the fact that they are a subsidiary of an Asian company. I don't know what the relationships are between China and America right now. So because of that, I would not necessarily jump on this. Let's see here. I'm looking at their news. Niche market. Intriguing niche specific e-commerce platform. Additional meme stock trade could be benefit to Newegg. So there's an investor place article about Newegg. It says Newegg Commerce stock offers exposure to an intriguing niche-specific e-commerce platform. In addition, the meme stock trade could benefit Newegg shareholders. Volatility torrent investors might consider a small stake in Newegg stock. Why is my Mac going to sleep when I have it plugged in? You're literally plugged in. One moment, y'all. See, this is why I plugged it in before we even started this conversation. I'm like, why is my Mac trying to die? Like, no, you don't get to die on me right now. Oh, because the power cord is not turned on. Interesting. That's how you get set up for failure, y'all. So, when your power plug is plugged in, but the strip isn't turned on. That's how you get scammed. Thank God for notifications, right? All right. So California-based Newegg Commerce is an electronics and computer parts e-retailer that has been around since 2001. If you're willing to accept the risks involved, now might be a great time to start a moderately sized position in Newegg Commerce stock. There are plenty of e-commerce businesses that you can invest in today for truly outstanding potential gains. You might want to think outside the box to look at competitors and market segments that aren't already dominated by corporate giants. Newegg fits that description perfectly. Some stock traders might not have heard of this company, which none of us have. I haven't heard of it. You probably haven't heard of it. Before we delve into the company's business, we have to first address the 800-pound elephant in the room. As Dua reported, Newegg stock exploded April 29th, closing up 40% in a single day. Seemingly, there wasn't any company-specific news that would justify such a move. Dua cited that two possible catalysts. The most obvious impetus was the resurgence of the meme stock trend. Almost exactly a year after it took hold of its markets, it appeared in the Reddit crowd that may have been targeting stocks for short squeezes once again. Moreover, the guy pointed out that Newegg is one of the more tech-forward online retailers around today. The company's platform accepts a variety of cryptocurrencies for payments. Okay, that could be important. When companies start accepting cryptocurrencies as a form of payment, they're already lining themselves up for the next generation of commerce, e-commerce. Like crypto is going to be a very big part of how money is moved back and forth, especially when the financial systems start to erode themselves because of the nonsense of quantitative easing that we're doing. So crypto is going to be a very valid way of paying for things. They're accepting that as that's actually a good thing. Just be aware of the risks involved here. Cryptocurrencies are sometimes quite volatile and could have an impact on the Newegg share price. Okay, if I'm accepting cryptocurrency as a part of a payment, if the price of that falls up or down, then I may have to accept more or less of that payment with my own benefit. So I could see where that could be a thing. It says a category leader. After learning some facts about Newegg, you might be surprised that the company doesn't get more attention from investors. Newegg touts itself as a category leader, and justifiably so. Evidently, Newegg is the largest e-commerce player in the technology vertical with global footprint of 2.1 billion in annual sales. The company implies it's in a fast-growing niche category, and there's data to back up that idea. Notably, the global tech product e-commerce market is valued at 1.4 trillion and is estimated to accelerate that compound annual growth by 15%. That's huge. That's a huge category to be in. So basically, they're saying that Newegg has the potential to be, again, a part of the next generation of stocks that are going to be useful down the road. In other words, even if you haven't heard of Newegg or used its platform, plenty of tech aficionados have. This is a huge company that operates fulfillment centers, which ship out more than 55,000 packages daily. Impressively, 91% of those are delivered within 2 days. So this is like an Amazon kind of shipping expediency that they have. As I've previously stated, Newegg is established, cutting the risk, but has real long-term growth potential. Still, Newegg remains unknown for some financial traders. That shouldn't be a problem, though, since you may have a chance to invest in this highly potential under-the-radar company. Therefore, consider Newegg stock an asset with some risk, but also possible rewards in the long-term shareholders. With that in mind, feel free to consider taking moderately sized positions in the shares of Newegg. Now, after having read that to you guys, that was a whole entire article on Yahoo about Newegg. I'm going to shift my position on this. If you're going to invest in a tech company, why not invest when it's at a basement price, right? We just said that the stock was going at 40-something dollars a share. Now it's trading at $8. It's not really much of a risk there, right? So I could see, having a small stake in this company, especially if it has the potential to, again, accept cryptocurrencies, if it's already an industry leader in a very niche market. Like, I actually like that because I think that you can get the most bang for your buck with companies that are in that specific category. Like, you want to find companies like this where if you can turn $8 into $46, that's a win just on the numbers. But you want to see that in an industry that's moving in tech. So I'm going to change my position. This is why when I look at stocks, I reserve judgment and I always reserve the opportunity to change my judgment as I find out more information. So never be so proud to not be able to reassess what you recently learned in spite of new information. Like, when new information comes in, you got to adjust. So the fact that these guys are in a $1.4 trillion industry space, they have a $2.1 billion footprint right now, and that they're pushing out products impressively in 2 days. 91% of their 55,000 packages that they deliver daily, 91% of those get delivered in 2 days. That is impressive as hell. So to me, if that's what they're rocking, I would put my money here. As a matter of fact, I'm gonna add this to my watch list. See, this is what I'm telling y'all. I'm just as serious as y'all. Like, let's add NEGG to our stock list because I want to follow them and their news, and I will eventually buy this. Newegg, it's a NASDAQ traded stock. I'm adding it to my watch list right now. Boom, added. Simple. And that's how you create a watch list that can help you to know when there's a good deal. Like today, if you invested in Newegg, you made 20-something%. If you put in $200, you just made you made $40 in one day. Like that's a lot in a day, right? That's a lot of money in one day. So you want to find companies that can do that. They're not the big part of your portfolio, but you can dollar cost into things like this and still make a killing. So what have we learned today? One, we learned that you have to know when to get in, when to get out when it comes to stocks. Two, depending on what your strategy was, if you came in knowing that this was a pandemic type of stock that's going to do well during a certain time frame, okay, jump in, but also know that there's going to be an exit strategy that you have to set up for. That exit strategy has to be something that is aligned with the company's goals, but also with the economy around it. If you see that a company is making money because of the pandemic, people not going outside, well, whenever those restrictions loosen up, that's time for you to start getting yourself acclimated to start selling out those shares and taking some of those profits home with you. A company like Newegg, NEGG, I will put that in the chat for this. I would say keep an eye on them. They seem like a company that can make you some serious money, especially if they're trending the way that they are. That could be a good look. Um, that could be a good look. Show me more data from Yahoo Finance. Yeah, so I would definitely keep them in the back burner, especially if they're going to continue to excel the way that they have. 27% gain in one day is pretty good, but I like the long-term aspect, the fact that they're an industry leader. They have a very good vertical integration of how they get their products out. They're shipping out 55,000 products. Like, that's a lot. Any company that has the kind of volume I want to invest in, to be quite honest, because that's a good sign. And one thing that you'll see when you look at the actual stock information is you'll see that they're on the original page where you see their potential. It shows the range of what the stock has done over the last year. So Newegg's range is $4.14 and $79.07. So understand what that means. So the 52-week range is what I want you guys to think about. Whenever you're looking for a company that is going to give you the most bang for your buck when it comes to investment growth, you want to make sure that range, that 52-week range stat, that the company's at the beginning end of that, like they're at the lower end, because you want to be able to grow into how high it's been in the past. It may not get to $79 again, but if you're buying this stock at $4, you're at the better part of the graph. Like, you want to make sure that you have the room to grow that stock. If you were buying into this company, Newegg, and its highest price was $79, so you're buying it at $65 or $66 or something like that, then that means that you're about $10 away from its maximum price that it's ever been, which depends on the stock's trajectory, but that's not bad, right? That means that it's a growing company. But the other end of the spectrum is good as well. If it's dropped significantly in price, that means that I can pick up a bunch of shares for a lot less than I would have spent if I had the $79 aspect of that trade, right? Because the 52-week range just tells you what people paid for this stock over the last year. So somebody paid $79 for the same stock that you're getting for $8. Somebody paid $79 for the stock that's trading right now for $8.66. So who would you rather be? The guy that paid $79 for this, or the guy that's paying $8 for this? So when it comes from that angle, you realize that you want to be the person that is buying the stock at the cheapest price that you can have available. On the next list down, it's a company called Gogo Inc. And again, this is exact same window of stocks that have a high change of percentage for today. This stock's 52-week range goes from $9.61 to $22.27. It's trading right now at $20. So it's trading near the upper part of its 52-week range. I don't like that, just because, again, unless the company is trying to bust through its previous range and trying to go from 22 to 30 to 40, like it's in a growing stock in a bull type of move, I would rather pay $9 for that stock than 22. Like, if I'm looking at the range that it's had, and I want to get stocks at the lowest part of the range, just because that means that I'm going to get the best bang for my buck. So that's something to consider. All right, folks. Well, that's pretty much all the time we got. Any questions about anything? Let me see. Do we have any questions on here? Relative strength index. Yes, Auntie, that's exactly what it is. But do people know that you are humanitarian? That's better than any iPhone. Yo, Legs, why are you so funny, man? Yeah, I am definitely a humanitarian for sure. That's better than any iPhone. That's 100%. I mean, it's so crazy when I think about the most amazing memories that I've had over the last 11 years, right? It wouldn't be opening up my businesses. It wouldn't be having a nonprofit, teaching financial literacy. That's not the most amazing moments. It would literally be going to Puerto Rico 5 times with a group of people and helping out my Puerto Rican folk. Like, that to me was a highlight of my life, right? And it's so crazy when you think about what life can bring, what life can do for you. Like, you guys got to go out there and live. You got to go out there and really make sure that you are taking the time to love on your family, to love on folks that are near you, to, travel, visit folks that you haven't seen in a while. Like, life is short and it's precious, so you don't really get a second chance at this. Well, you do, but most of you don't know that. It's not just a second chance. It's like infinite amount of chances. For some of us, not all of us have that history, but for the few that do, You get to do this more than once. But for folks who don't, you better make sure you take the best opportunity and do the best with what you got, right? So take the time away to go visit family, visit friends. One of my buddies came into town this past weekend. I haven't seen him in a while. And it's so funny because folks think that him and I are beefing because we have like this online group where we chat and we talk about Madden and stuff like that. And in that group, I have I'm a caricature. Like I literally create a persona like WWE, like I create like a NWO kind of villain type of guy. And then I pretend to be him in there and I just go off. He comes this weekend and everyone's like, yo, you guys are friends? I'm like, yeah, like that's one of my best friends. What are you talking about? There was a lot of love for my man that turned 40 this past week. Happy belated birthday, Mr. Ward. And just like it's to me, it's those type of moments that you really have to cherish because you may not be able to see another one. Like you're not guaranteed to be here another year. Like what makes you think that you're going to be around another year? That's not promised to you. So when you get those opportunities to see family and to see friends and loved ones, like take advantage of that. Make time for that and make time for yourself too. Like we have to accomplish our mission while we're here with the time that we have, and no one knows when their time is going to be up. You don't know. So if your birthday's coming up, make sure you do what you want. If your holidays are coming up, make sure you see people you love. If there's a conflict between where you want to be and where you don't want to be, go where you want to be. Like, do not make life difficult. Be where you need to be, but just know that there's a lesson in every situation. Like, I have had so many aha moments over the last 2 months when it comes to like life and its lessons. I'm like, yo, everything is practice. Everything is literally training us for something next. So one of my buddies, he had a live earlier today, and he was talking about what lessons he's learned from other men, right? Lessons that he took away from other men. And one of the things he took away was don't let money take away your ability to love in areas or to be effective in areas that are in need. Like never let your job take you so far away from the areas of need in your life that you lose things that are important to you, And I was like, dang, that's important. Like, think about what that means. Like, if you have an area of need, and you're not getting there because your job is taking the time for that. It's like, okay, how do you balance that? Like, how do you get to that area of need and still maintain that? What else? He said that there was what's the other one? Make decisions today that are aligned with your future self. That was the other one that he said. And this is my buddy Tice, the trainer. He's just, that's my guy. So again, make sure that you're doing things that your future self are aligned with. And when you think about who you want to be in the future, like what type of successful person do you want to be? What type of business do you want to have? What type of professional, like who do you want to be? What type of maturity do you want to have? What decisions are you making today that are aligned with that person, aligned with that version of yourself? Like similar concept would be, if you can go back in time to the 21-year-old version of yourself, what advice would you give them now at 38 or at 40 or at 60, going back to 21? What would you tell yourself? Like that's the kind of thinking that you have to have now, because you're making decisions now that are going to impact your future self and your future potential. We said that this is the year of harvesting. If you didn't reap anything last year, you're not harvesting a damn thing this year. So how do you fix that? Start reaping things, start sowing things now to reap it later. Like you're only reaping what you sowed last year. So if you're not reaping anything, it's because you didn't sow nothing. So sow some stuff. And to sow, you have to have a forward thinking process. You have to know that you're doing this not for today. I'm sowing these seeds so that when they are harvesting in August and September, I'm going to be better off. You must think that way with everything that you do. So, folks, I want to thank everyone for joining us. Again, time is something that you don't get back when you spend it with me. I value you and your time. I hope that you value yourself and your time. I just want to thank you guys for spending that time with me. Today, we had talked about a couple of stocks. We talked about Newegg, which is a stock that we just looked up. We talked about Docusign and just did a case study as to how to know when to jump in and jump out of stocks. We want to get back into the financial literacy piece and get you guys more acclimated with that, because as spring comes, as summer comes, I want your financial portfolios to look amazing, and I want you to know exactly what strategy you want to have for summertime. So we're going to get into it. Next week, we actually have a guest coming on. I'm going to confirm that. I think I confirmed it this morning, but I'm going to confirm just to make sure. But do not miss next week's episode. It's going to be awesome. I'm not going to tell you who it is, but just know that you're in for a treat. All right, folks. Appreciate you guys. Thanks so much for joining us on YouTube and on Instagram. Again, we are powered by StreamYard. We are the Way Podcast. Thank you so much for your time, and I'll see you guys next week. Auntie, I'll see you next week, sweethearts. Okay, we'll talk to you guys.